Hey, I'm KORST, a name made by combining Korea and stocks. I travel like a ghost, delivering Korea's markets, economy, and culture straight to investors all around the world. All right, let's jump right in. Today, just like I mentioned last time, we're talking about something called the Korea discount. Before the explosive rally in 2025, the Korean stock market went through years, honestly, a decade of frustration. The market was stuck in a narrow range for so long that people even gave the Kospi a nickname, Box P, meaning it just moved sideways inside a box. And that's strange, right? Because Korea is home to world-class companies like Samsung Electronics and SK Hynix, leaders in semiconductors. It's also strong in autos, shipbuilding, defense, batteries, multiple globally competitive industries. So why did the stock market barely move for over 10 years? Today, we're going to break down the reasons and also look at what the new Lee Jae-myung administration, which began in 2025, is doing to fix this problem. There are two main causes behind the Korea discount. The first one is corporate governance dominated by controlling families. You might have heard the term Jae-bool. It's basically Korea's version of large, family-controlled conglomerates that expanded across many industries after the Korean War. It's such a uniquely Korean concept that even in English, people just say Jae-bool. The key difference compared to U.S. companies is this. Ownership and management are not clearly separated. Take Samsung, for example. From the founder Lee Byung-chul to today's chairman Jae Lee, leadership has stayed within the same family for 3 generations. With relatively small ownership stakes, the family still controls the entire group. And Samsung isn't the exception, it's the norm. In Korea, control of a company is often inherited, not professionally appointed. Now imagine this. What if Bill Gates handed Microsoft's CEO job to his child? Or Larry Page replaced Google's professional management with a family member? As a shareholder, you'd probably feel uncomfortable. Sure, maybe the heir is talented, but there's another big issue. Korea has one of the highest inheritance taxes in the world, so controlling families often have to sell shares or restructure ownership just to pay taxes. And that creates a tough question. Do they really want stock prices to rise too much? It might sound a bit controversial, but honestly, I think this has been one of the biggest hidden reasons Korean stocks stayed undervalued for so long. Is it changing? So, is this getting fixed? Not completely, but progress is happening. Since 2025, Korea has been pushing through a major commercial law revision. The most important change? Directors' fiduciary duties now apply to all shareholders, not just the company as an abstract entity. Before, minority shareholders had very weak protection. Now boards are legally required to consider everyone's interests. Some corporations argue this could slow decision-making or hurt management flexibility. But the market? Investors actually see this as very bullish. There's even a public hearing at the National Assembly soon, so I'll update you if anything important comes out. The second reason behind the Korea discount is honestly pretty shocking. In Korea, companies often spin off their best business units and list them separately. Let me give you an example. You've probably heard of LG Energy Solution. It became one of Korea's largest IPOs ever, ranking top 3 by market cap. But originally, it was just the battery division inside LG Chem. So investors who bought LG Chem for its battery growth story suddenly saw that core business split off into a separate company. Naturally, shareholders felt betrayed. Another case is Kakao. Korea's dominant messaging and tech platform. They split off Kakao Bank, Kakao Games, Kakao Entertainment, Kakao Mobility, and listed them all separately. So instead of one strong company growing together, value kept getting carved out into subsidiaries. This structure allowed companies to raise capital, but often at the expense of existing shareholders. And over time, that seriously damaged trust in the market. To address this, regulators are stepping in. The Financial Services Commission now requires much stronger disclosure rules when companies spin off subsidiaries. Not just formal paperwork, but clear explanations. Why are you splitting? How does it affect shareholders? The Korea Exchange is also tightening IPO reviews for spun-off companies. And the new law gives regulators broader authority to supervise these listings. Additional reforms. There's more. The government is also discussing mandatory or expanded share buybacks and cancellations, tax incentives for higher dividends, a 30 trillion KRW National Growth Fund, efforts to join the MSCI Developed Markets Index. Nothing is guaranteed yet, but one thing is clear. The government is finally serious about making the stock market more investor-friendly. Big picture. For years, Korean investors didn't trust the stock market, so they moved their money to U.S. stocks, crypto, or real estate, especially real estate. Housing prices in Seoul skyrocketed. Now policymakers want that capital to flow back into equities instead, and fixing the Korea discount is the first step. That's all for today. Next time, I'll introduce other Korean industries with strong technology advantages, not just semiconductors. If there's any Korea-related topic you want me to cover, leave it in the comments. I read every single one. If today's video helped you, don't forget to like and subscribe, and I'll see you in the next one.